Yeah, just do the introduction properly.
Okay, cool. Go for it.
Okay, guys.
Welcome to Lit Capital. Today is our live stream for the Q&A, ladies and gentlemen. Welcome back.
For March. Nearly, oh, bro, we're nearly in April.
March Madness. Remember when we said at the start of the month it's going to be a March Madness?
Yeah, we did.
I guess that came true with everything that's happening right now.
Serious.
Guys, I'm going to just start us off. I'm Adam. I'm just going to show you a couple moves that we some of you will be very used to, some of you won't, some of you will become used to. So I'm just going to get straight into it. For my students, we know the buy to sell scenario. This is what I was looking at on the gold euro. This has been in the Discord for those of you that are in that. If you're not, again, there's a link on the website. I do have a few people asking me usually. Just quickly show you here. Once you click Trading Mentor, there's a drop-down box for the Discord channel, and then you can eventually, when this loads, there'll be a link and some information on how to join it there. I'm going to move on because that's taking a while. There we go. So there you go. There's just a bit of the information how you can join the Discord. Back to the move, the gold euro. As you can see, we've had the area where we've seen price push up, and we've had the move away. Now, again, we was talking about, for those on the call last week, build up your reasons. You want to build up the case. What we have here, what interested me, was that there then was a daily structure break. So can you see how price was moving up, moving down, moving up, moving down, moving up, moving down? Everything's still in structure here. So it then tries to make a new move up, can't make a new high. There's the break. Now, I don't know how many of you use this. I use the line chart a lot. It lets you see where price actually closed. It avoids the wicks, okay? So just have a look at that. You can see this is where the candle actually closed. So that's where the line stops. It helps when identifying structure immensely. I do recommend playing about with that. But okay, just to get back to the move, we had the structure break all the way down to here. I noticed that liquidity was grabbed. Okay, for those of you that know about the liquidity grab, you can see that they did what they needed to do in this area. Okay, price then moved up, and as you can see, we get an entry round about the 1520 area. I am still expecting price to climb slightly higher. I do want to see it come towards the 1530 area, so do stay tuned in the Discord with that one. Who have we got new in here? Let me pick on someone. Someone new. Who doesn't understand the buy to sell scenario? Anyone?
Me.
Who's me?
Me, Shaq.
So, okay. Basically, what we know about banks' movements, they've had to buy this area here, okay? They've pushed price up to sell in this area here, buy to sell scenario. This is them doing this, okay? We then get the move away, but can you see how structure stayed intact, letting us see that we could still be looking for buys? Does that make sense? Are you seeing that with the line chart? How, you know, price doesn't break any area until eventually coming down here and breaking this. Does that make sense?
Which mean my price doesn't break any area?
So see how, all right, let me go through it. Let me go through it for you. You see here, you see how price is going up, down, but not breaking the structure?
Yeah.
What I mean by that is, for example, if this was to come all the way down here, it would have then broken the structure, okay?
Okay, yeah.
So as you can see, the movement going up, and then it comes all the way down here. It's still in the structure. It's still telling me that price could then just go and do this and make a new high. Okay, but then we get price turn here because it failed to do that. And then we turn around and then it's broken the structure once it closes below here. Okay?
Okay.
Does that make sense?
Yeah.
And now we've got the push back up into our area where we know they have had a play. They have had an area. They've made an action in this area. That makes sense.
Yeah.
So now we get the reaction here because we know that they've had to do something, mitigate out of price in this area. Make sense?
Okay. Yeah.
Anyone got any other questions on anything I just said? Everything clear?
Yeah, that was crystal clear.
Wicked. Okay, I'm just going to go on to another setup. Something that the power of the higher time frames, okay? So let me just have a look at this on the monthly, guys. Pound Aussie. Can anyone see a similar picture we just saw, right? This is on a big time frame. This candle interested me. Why? It dipped the highest, it grabbed up in this area, yeah? We then get price moved down to here and the retracement round about to the 78% area, but that's not what happened. Can you see how it tapped off the bottom of this candle?
Yeah.
Can everybody see that?
Yeah. Yeah.
It's had a reaction in this area. It lets me know this candle is definitely worth watching. And of course, we also have the key level of 2. It's the 2.1 area in this zone. So again, it just adds up a reason, adds up confluences. It's things that we know big institutions like to do. And as you can see, this is no, I mean, I haven't caught this move because I'm waiting for price to come slightly higher towards the body of the candle, but it's not a, you know, that's nearly 1,000 pips, guys.
Oh.
Just off of the sell from this area. Is that clear? Can everyone see this, what I'm seeing here?
Yeah.
On a monthly time frame. So now what we do is we scale down. We just want to see little things that have happened in these areas. So, okay, I know there's been a reaction here because price has dipped this high. So now this is why we're starting to get the bearish involvement. And that's why it's starting to, you know, head down. Can everybody see that? Just making sure everyone's clear with it. Come to the daily. And again, you just start to see what price is really doing in these areas. Just looking at the picture, what it's doing. Struggling here for a few days now. Could it move away from here? I'm expecting it to come a bit higher. I feel like it would have moved. It would have broken a structure by now. I haven't seen anything like that yet. So I'm expecting the price to come a little bit higher. That's just the setups that I've been looking at this week. I'm going to take you guys into another, just to give you a bit of a clearer view of how to see this stuff, okay? Let me go on, let me get this out of the way. I'm going to show you guys a break in market structure, right? And how I saw this move again. I showed the guys last week. I just want you to get clear with how you see these things. Right. So who was it that just asked, wasn't clear? Who was I just talking to? Shaq? Was it Shaq?
Yeah, I think.
Yeah, it was. Yeah, it was.
Okay, Shaq, this is the other way now, right? We're just going to go on a downtrend, yeah? Again,
Okay, cool.
I'll look at the line chart. Can you see how simple downs and ups, no structure breaks? Yeah? Makes sense? Yeah. Right. Just looking at the candles, right? Can you see where the structure's broken? Can you see now that there's signs of price wants to go up because it came out of this structure?
Which one's the structure line?
See, once it breaks above here, yeah?
Yeah.
It's now like out of shape. Does that make sense? If this was to continue going down, I would not expect it to break above here.
So wait, so because it's going upwards and then it's suddenly gone down at that point where mouse was, it's now out of shape. So it's broken the structure.
It's broken the structure. That's correct. A 4-hour structure break has just come into play here on the Euro AUD. Make sense? Can you see that? Can you see how things have changed in the move down?
Yeah. Okay. So it's gone up and then it's gone down. So when it goes down, that's when it breaks the structure.
You cut out, bro. Say that again.
Yo, so you know when it's going up, yeah, and then all of a sudden it goes back down. That's when it's broken the 4-hour structure.
Watch this. Watch this, Shaq. I think this will help. Watch this. So this is what you're going to be seeing in the charts, guys, yeah?
Yeah.
This is how it's going to look. See how price is climbing down, making lower lows, lower highs, lower low, lower high.
Yeah.
Yeah, you seeing that?
Yeah.
Watch when you notice price has done something different. It's coming up.
Lower low.
See that?
So now it's broke the structure because now it's
now the structure's broken. High. Yeah, because it's now it's beaten these areas. Yeah.
Yeah.
It's closed above. Again, that's why I use the line chart, because I like to see where price actually closes. Yeah.
Okay, cool.
Now, the next thing we want to know is, where did this start to happen from? where did this push of the break, where did this change of character come from? Here. This is the candle that dipped the lowest, yeah? And then we started to get the move away, never going lower than that candle. So now I'm going to use this candle as an entry. I'm going to use this candle to get into the market. So I've got this is how I've got my area, my boxed area here, the two black lines, yeah?
Yeah.
Make sense?
And what do you call this? You know, you call this your entry. Is this what do you call this, when it's broken the price structure? Is that how you refer to this term?
Yeah.
It's not so much sorry to intervene, bro, but it's more like a point of interest. Like it's an area you're interested in now.
It's an entry point. Yeah, yeah.
Yeah, because you know there's a play that's happened there from something, from a financial
Can someone mute
institution.
themselves? Hold on.
Yeah, music.
Does that make sense now, though? Yeah, Shaq.
Yeah, yeah. It makes sense though.
So now we're watching this candle because this is where we know the move, the turn of play has happened, right?
Watch this.
Watch what price does here. We're in. See how it came to my area and turned perfectly on the line.
Yeah.
Now we're
Question,
away.
Adam.
Question, hit me, Chris.
Yeah, so basically I've been, I know how to basically like see this happening,
Yep.
but my hesitation always comes from whenever it tries to retrace it or retest. Sorry, retest is the right word. When do I actually know when to get in the trade? Because see the way there's two there that made the line, but then
Yep.
you chose that one, or the third one probably.
The bottom line here.
Yeah, yeah,
That's what you mean, right?
yeah, yeah.
Well, to answer your question, first of all, you never really know.
Okay.
How we work in the market is off probabilities. I know there's a strong chance that something's happened in this area that's a bit fishy. And for those of you who have been with me through the lit candle lesson, you'll remember me saying the candle doing something out of the ordinary. Well, this candle here, out of all of these, did something out of the ordinary for me. How would I know? How would I get into the best situation to be prepared for these moves? Well, I'll give you my method. First thing I'm going to do is put the line on top of this candle. Why? Because I want to see what happens when it hits it. I want to see if we start to see a turn, if we get our entry. Okay? The next thing I'm doing is putting 50% of the candle, a line at 50% of the candle. Because I'm aware they like to come back and dump their share off at that level. Okay? So we get the reaction, we get the turn, but I'm just watching price. Again, you wouldn't be watching this on the 4-hour time frame. You'd be coming down and looking on the smaller time frames, seeing if you can see the action, seeing how it's coming. Make sense?
Oh, okay.
But that's literally it. We're going off of a chance of probabilities, right? Again, I'll show this move again. I'll do the statistics. When we get in at this level, right, 161, 100, yeah, we're risking about 27 pips below this candle, yeah, below my candle on the left over here, yeah. So I'm just going below this candle. That's where my stop loss is going, yeah, because I'm aware that price shouldn't go below that candle because I know that that's where they've done something. Okay. Risking 27 pips to catch. Watch what this move does from this area. For those of you who've followed this, it's just been climbing ever since. Yeah.
Wow.
Doesn't stop there. Look, it's like left my screen now. Look, I can't keep up with it. Okay.
Yeah.
Anyone got any questions on anything I've shown?
Yeah, I got a question.
Hit me.
You see where you marked your institutional candle, where like
The
you're
lit
meant to
candle.
mark the top and 50%.
Yep.
Did you do that on a lower time frame?
No, I did it on this one because the 4-hour structure break was the thing that the higher time frame is always going to give you a more powerful picture. So once I saw the 4-hour and saw this break, that's how I marked my lines off of this candle. I didn't want to get confused by going on a smaller time frame and starting to look at all this noise that's in this area. As you can now see, it doesn't look as clear as the 4-hour, does it? You know, oh, what one am I looking at now? But I mean, you could. There's no harm in going down to the smaller time frames. That's what we do for the entry. But I will always stay with what I've marked on the 4 hour. There's a move that I'm sure, I'm just going to quickly show you the reason why this will help. See this? You see this move that went from here, this area here. I do know Jacob may want to talk about this. Jay, if you want to butt in, please do. But,
yeah, when you're ready, bro.
all right, cool. This is a Jacob product, people. This is a call from our man himself. I just want to show you how it kind of seen it a bit better, right? See how it looks like noise, and this is just noise on the hour time frame, right? You don't know which candle you're really playing off. You might be waiting for this one down here because of, you know, it's dipped to the lowest, yeah?
Yeah.
But look on the 4 hour and just look how the picture becomes clearer. You see it? You see how you got the entry? Because this was the candle we were looking at. It's the last down one before we got the move away. A sell to buy scenario. They come back, dump again. All right, let's get it from the head. Let's get it from this line. Not a bad day's work, fellas. You know?
Wait, sorry. Right. So regarding this move, right? So basically, so he saw the see the yellow bit on the top of the thing that's marked at the 1.6709. Was that the entry because it's at the top of that black candle?
Correct. But why?
And why was that black candle so significant?
Because this is where the move turned away from.
Oh, where it changed. Okay.
Yeah.
Cool.
Yeah. So we I don't know. We have a rough idea that they've sold from here. It's probable, yeah. Again, I like to use the word probable. I never want to portray the image to you that there's a certainty in the market. There isn't.
Yeah.
You're living off of probabilities. Okay.
Yeah.
They've sold it here. They've pushed it up. Why has it turned around from that area? Because they sold it down and they've moved it away. It then comes back very quickly, dump the share, and they're gone. This is probably going to go up to here now. Probably make a new high.
Yeah.
Okay, cool.
Elaborate on that, bro.
Yeah, take it. You can take it from there, Jay.
Yeah, love. Just to go over sort of what Adam's showing you. The reason the 4 hour time frame is powerful and why we like it a lot, or higher time frames in general, right? You just get overall clarity of the direction that the banks care about, if that makes sense. The banks don't care about what's happening on a choppy 15-minute chart or a choppy 1 hour chart where it's going from bearish to bullish or bullish to bearish, because you can get multiple breaks of structure on smaller time frames. That doesn't make it significant enough, right? But when you get bigger time frame breaks of structure, like if you get a 4 hour or daily break of structure, it's way more significant because the banks are basically putting a lot more money behind it, if that makes sense. If something moves in a direction for 3-4 days, the banks are in that trade for that whole period of time. So what we understand about retail traders, right? We can't make the market do this. So someone had the question about why did it make it significant? I'm not sure who asked that. So,
yeah, that was my question. Yeah.
Just to elaborate, like when you see candles, right? Because you got to remember this is a 4 hour chart, so each candle is 4 hours. Yeah. If you see something moving in one direction for over a day and a half, you got to say to yourself, okay, we can't do it. Retail traders cannot do that. Okay. They can't do that. Who's buying it up that much? Even if a market moves 20 pips, a retail trader cannot do that. You could have $250,000 in an account. I guarantee you couldn't move the market 20 pips. I guarantee you couldn't do that. So what I'm trying to, what we now know is that what makes this significant is that they push it down, right? To do two things. One, to entice sellers, because you got to understand, right? What trend have we been in overall? Okay. Overall, where are we going? We're going down, right? So everyone's they're thinking, okay, it's going to continue, right? So when you get these 4 candles here, okay, and then you get a little retracement and then you get another big candle pushing down, I guarantee you, right, that retail traders, they're seeing this candle move and they're clicking sell, 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 all in this candle, right? Panicking, fear of missing out, not dealing with emotions, not understanding that they don't know how to wait on the sidelines. I want to get in. I want to capture the move and can make it continue down. So what happened?
Yeah.
They haven't noticed the subtle structure breaks. They haven't noticed any of that. Okay. So when I put this chart in the Discord earlier today, or what I was looking at. What made it significant is this. This candle here closed above this lower high. Does that make sense?
Yeah.
Yes, now you've got a new higher high.
So now you've got a higher. Well, no, it's a higher high, yes, but really it's a high. So really, so if you look at it from a, it's very subtle, right? So if you look at it like this, okay, look at this candle, right? It closes below this black candle and this black candle, just about. You see it?
Check the line
Yeah.
chart. Okay?
I'm gonna check the line chart, of course, but I'm just saying on the line chart, this is the low point, okay? So when you go back to the candles, if this is the low point, then really it should not break this area here. Okay. It should start basically where they started failing. It shouldn't even get up to this level. So when it does get up to this level, it's a characteristic which is showing us that the continuation is not changing. Does that make sense? Because this is basically a lower low being made. So we're now anticipating a lower high being made to then a lower low again. Does that make sense?
Yeah, I think that makes so much sense.
That makes sense, yeah? So then when you don't get that, and then you get the break of structure, right? So if we do it like this, let me just show you a little bit of a drawing here. Okay, so if we start to get, okay, this lower high, lower low, lower high, lower low, break, right? It shouldn't go past that point.
Yeah.
So now, this candle is very relevant because we know that the majority of the institutional buying is done when this is actually going down. So it might seem confusing to you, but institutions, when they're pushing this down, they're buying in this candle. So then when this next candle closes, you can start to see all of the positions moving. The majority of the buying is actually done in the last down candle. That's why we look for it. So then, because we know they're pushing it down purposely to, number one, capture liquidity, and number two, they want to get people in on the trade that still think it's going to continue down. That's the reasons that they do that, right?
Okay, yeah.
Does that make sense?
Yeah.
Okay, cool. So then when you have that, you now know that, right, okay, this is very significant. So what do we do now? How do we do it? How do we make a case for it? How do we understand where we want to play from, right? Fib zones. Okay, that's a low. That's the low, the lowest of this area here. This is the new high. So for the person that said, oh, it's a new higher high. Yes, it's a higher high, but really this is a low. This is a high. So now we're now expecting a swing to continue the other way now. Does that make sense?
Yeah.
Nice.
So really we got low, high, lower high. We're now expecting a higher high. So now that's what we're expecting, the trend to continue the other way, right? And why do we believe that? Another confirmation. Go on a higher time frame. Let me get rid of the fib. Go on a higher time frame. Where are the targets? Like we've had all of this selling, okay? So if they was buying in order to make the selling happen, these are all open positions, right?
Mm-hmm.
So if you go on the weekly chart, okay, you start thinking, okay, this is the last up candle and they sold it down for 2 weeks after that, right?
Yeah.
So if this was to continue down, because realistically, on the weekly time frame, it is bearish because it's broken all of the lows. We're at the lowest point since like 1985, I believe. So now, if this is going to be a sell on a higher time frame, okay, they're not going to be selling it from down here. It doesn't make sense. It's got to retrace, come close from these areas here, and then continue down.
Oh, okay. Yeah.
Does that make sense? So the higher time frame is always going to trump the 1 hour. It's always going to trump the 4 hour. Whatever that. So realistically, the 4 hour, right? compared to the weekly. So we now see that the weekly's bearish. Okay. The daily, what's the daily? Bearish, right? We haven't had a retracement really on the daily yet. That is significant. So the 4 hour is what? Bullish. 4 hour broke to bullish. So what does that mean? That means that it's now had permission to do a retracement on a higher time frame. Does that make sense?
Yeah.
Okay, so that's why all of these time frames are there. It's a fractal. Everything is a fractal pattern. Okay, but what the banks care about is the overall picture. We know that realistically, where they was pushing this up for that week, realistically they was adding sells. That's what they was doing. So this candle up here is an open position for them. So instead of it continuing down, yes, they're making money from these positions that they've got in these candles here. But the longer that they go down, the more they're going to be in the negative as well. So yes, they're making money, but until they come back and close out of these positions, they're going to continue to lose millions and millions, right? So for those that haven't seen what we have on our Instagram as well, we've actually got a post of what a banker's MetaTrader 4 looks like. So definitely go through our post if you haven't seen that. We made a post on it just to give you guys an idea of them what they need to do in order to make a move possible for them, because they can't press buy or sell like me and you can. Okay, they're playing with too much money to do that. So there's a mythology and a way that they have to subtly hedge not hedge, but they have to put their trades in piece by piece because they're playing with too many lots. Lot sizes is, you're talking about 250,000 lot sizes, 350,000 lot sizes. It's a lot.
For those who haven't seen that picture, it's by Will Smith on the Instagram, the litcapital.
Yeah, so check that.
Check it out, understand it.
It will make more sense as to why, they need to sell to buy to sell and stuff like that. So just to close out, right, the 4 hours bullish. Yes, we have upside targets. This has been selling off for a long time. So as much as we have all of these upside targets, we now know on the higher time frame, we can at least get to 61. It should at least get to 61 before they sell. Okay, so
Yeah.
that's the reason why we was looking at it in that specific way. So it's not going to be overnight. I'm not saying it's going to fly up. It might take a while. It could take a week. It could take 2 weeks. Who knows? But that is what they're doing. There's a mythology behind it, and there's a reason why these down candles are very significant. So if you get one up candle or one down candle, right, and then it's followed by smart money clearly entering the market, this is the footprint we are looking for, right? We want to see that. Okay, we want to see that because it's not one or two or three candles. It's significant. It's actually like, okay, if a currency pair can move 300 pips, I'm telling you now, no retail traders doing that. So you need to pay attention. So then when they then push the market down, all they're doing is what? They're closing the sell that they broke even at, and then they're adding more buy positions. That's what they're doing. So with these moves, you don't have to be the hero, right? And try and catch the bottom. Like, in order to predict the reversal like here, it's difficult. It's more risky. Like there's no I'm not ruling it out and saying, yeah, like you can't do it, but it's risky. You don't need to be right to predict the reversal. Yes, this entry would have been the greatest, but sometimes you never know. Like who's to say it couldn't have dipped this low? It could have dipped this low here. We don't know. So instead of jumping in too early or trying to predict it on a smaller time frame, the 4 hour holds more weight. So then when we did get the break, okay, we was just patient, we was waiting, and then just boom. So then some people would say, how do you know where in this 4 hour candle to enter from? Okay. And that is when you would use smaller time frames and stuff like that. There are confluences you would use. One thing I will show you, I'm going to touch on it briefly, but I'm still in the midst of back testing it, so I don't want to deliver it to you guys wrong. But one thing I really have noticed is this candle here is significant. Okay, I'm talking about this blue one. This is significant for me. So what I've now noticed, and this is just from me, looking at this for a couple weeks now, if you think about it, right? They was buying here and they was buying here and then they sold it down again, right?
And who's playing that music as well, man?
Yeah, can
Please.
someone mute themselves? Yeah, please.
iPhone. Whoever's got the iPhone, please, you gotta mute yourself.
Yeah, no worries, bro. So yeah, excuse me. So what I was saying was, right, if we look at these two candles here, right, they bought it up, right, for 2 hours straight, right? Like I said, 165 pips. We can't do that. It then went down for the next 3 hours. Okay.
Yeah.
So then, now that we've realized that they might be wanting to take price the other way, yeah. When it then goes past, one thing I've noticed now, and it's still fresh, but one thing I've noticed is that they're not mitigating how we would think they're mitigating. So we would expect them to maybe mitigate and then keep it going and then add sell positions. But because they're now going the other direction, right? What they're doing is, remember, because it's the last up candle, they're selling in this candle. Does that make sense?
Yeah, yeah.
So because we know they're selling in these buy candles, right? The top of this is going to be the majority of the selling, or 50% is going to be majority of the selling, okay? It then pushes down, but then it then goes the other way, okay? When this candle came to this point, realistically, they are getting out of the sells because they want to now add buy positions and get out of the sells that they did to push this market down. So then when you go to the 4 hour candle, right, you're going to realize that, okay, that's that candle.
Oh, nice.
It's the same candle. You see what I'm saying? So that's why people are like, oh, how do you judge, you know, where to enter off of the 4 hour candle? Realistically, you could go to a 15-minute, you could go to a 5-minute. I like to do the same too, right? Sometimes price is very aggressive though. Like they won't, as you can see, if we move it, it's going to be a bit too small. But if you can see here, realistically, you're going to think, right, what candle am I going to use? Because this whole area is that highlighted 4 hour zone. Remember I just showed you? So it's very, when you go on the smaller time frames, it's very hard to say, okay, I'm going to use just this candle here. It's very hard to say that. So realistically, when you're on the 4 hour, you kind of need to just be looking at what the reaction is having from as soon as it enters into that candle. So you would go to a 5-minute, as I was saying, you would see some type of reaction, okay? Big volume, right? It's hit the top, and then next 5 minutes volume, next 5 minutes volume. Okay, so like I was saying earlier, we cannot move a market 65 pips in 10 minutes. We can't do that. So these are the little things you have to pay attention to. The volume of the candles. It's not like it's just trickling about and it's going like, you know, you're seeing candles where they're like, boom. Yeah? Then you're seeing little retracements. Then you're seeing big volume. So that's showing you smart money have entered. Right? I hope that makes sense to you guys.
Yeah.
So the smaller time frames, yes, it's good to gain an entry off that. But just remember the bigger picture, right? Sometimes it will be aggressive like this. Sometimes it will accumulate. It's never going to be the same picture. You never get the same thing happen twice in a market. It's just not like that. So yes, you can get an aggressive move. Sometimes you can get if I show you, Susan, you can have your fib zone, right? Like this. Okay. Sometimes you can get price sitting on these areas, these kill zone areas, and it could be trickling and accumulating along like this. Okay. But when you get that, you should be confident of that as well. Don't think, oh, this is going to continue or whatever. It could be at 61, it could be at 70, 78. If you get that and you're playing off a specific candle and you know that your candle is sitting in them areas, have confidence in the fact that it's accumulating and going sideways, because they're basically positioning themselves more than one time. So there's many times on smaller time frames that you can actually see that as an example. I'd have to like show you another, like get a few examples for the next lesson in order to show you that, which is no problem. But you can see just accumulation where it's just like little on the 5 minute time frame, 1 minute time frame, whatever. You see little buys, little sells, little buys, little sells. When it's hovering inside your point of interest, you should be confident about that. Don't think, oh, it's not taking off or it's taking a while to take off. Sometimes it's not just going to give you the aggressive move. Sometimes it's going to want you to, you know, doubt your trade and get out, or think you've got it wrong, or it's just going to stall. The market's not going to, it doesn't have to do what you want it to do. It's going to do what it wants to do regardless. Okay. So once you can understand that and be patient and realize that it's the structure's still valid, it's not beating this area and it's stalling at that, that's a good thing. It really is a good thing. So that's what I wanted to show you guys personally for today. I hope you guys took some value. I'm going to hand it over to Vel for the rest of the lesson. Any questions? Anyone, any questions?
One day, there's a question someone asked about a lit order block.
Yeah. Excuse me.
Who was it? Who was it?
Yeah, this is a lit block, bro. That's what a lit block is. So this is a block.
That candle.
Yeah, this candle is the block. Because what you need to understand about blocks, right? This is where they was pushing it down, but when they was pushing it down, they're buying in this candle. I know it's a concept that sounds weird, but where this volume is, it's going down. It's going down. They're trickling buys in.
Yeah, well, on the lower time frame.
On the lower time frame, exactly. They're trickling buys into this candle, right? So when you then understand that concept,
yeah,
okay, the candle doesn't always. Who's drawing on my screen, man? The candle doesn't always need to be this specific size, but when you have more volume to the candle, one thing I've noticed is that, you know, it's more valid in my opinion. When you have a full-bodied candle, it makes it more of a point of interest. Like, you don't really want to see a doji candle, you know, with like hardly any body, and then it's just like wicky and there's like minimal body or something like that. Excuse my drawing, but you get what I'm trying to say.
Yeah, is it not when they're holding price on a lower time frame in a higher time frame candle?
What you mean?
Does that make sense?
Block? Say that again, bro.
You know, is it not when they're holding price, where they're like stalling price inside of a candle on
a smaller time frame?
No, see how you mark that candle? Are they holding price on the smaller time frame? Are they holding price inside of that candle?
They're not holding. No, it's just basically basically they're happy to buy from this point. So it's like we don't want to come through the floor. Like when say this price was coming down, we don't want to come through the floor because the majority of our buyers are in this area. So why would we want to break this area if we're buying in this area? Do you see what I'm saying? Because look, like you see these candles here, stuff like that. These are the positions they're buying into. Okay, so then if I get rid of that, excuse me. So when they bring it back again, if you can see like I said, I'm gonna really like lock this down properly. But if you understand, you got this candle here. Okay.
Well, they
pushed it up. They pushed it up to sell it. So then when it comes past it again, right, really they're getting out of the sell positions in this candle. Because when this candle's going up, they're selling in this candle. Same way with the 4 hour. When this is going down, they're buying in this candle. Does that make sense? Yeah. So when you see that and it dips into it, yes, you've got your confluence of 61%, 61.8%. But realistically, there's two things they're doing. They're mitigating, and they're adding positions. And what else are they doing? They're wiping out all this liquidity here. Yeah, all that wiped out. So there's many reasons as to why things happen in the market. Like it's never a coincidence. It's always calculated as to why it has to do that. Right. So you just need to see the signs and build the case. Obviously, the timing of it as well. New York session, prime time. Okay, you got the London high. They'll probably take that out tomorrow, maybe even in the night time. Who knows? But because of the timing that we are, we're midweek. Like these are the things that are lining up. These are the things that are lining up. So it just takes, you know, it's gonna take time for these things to stick. Like we're humans at the end of the day. We're gonna make errors. We're gonna overlook things. But it's just how we process information and the you know, the recurring pattern of us looking at these markets. Like that's what's gonna make the difference, bro. So just keep trying to look for these things and keep trying to build confluences for your trade. That's all I can say, bro.
All right, cool.
Cool. Anyone else regarding what I just said, or we good?
No, we're good. Thank you, man.
We're good. We're good.
Bro.
Thank you.
All right, man. Well, I'm gonna pass you.
That was good.
Appreciate it, bro.
Yeah, come. Let me get inside this one, man. All right, cool. Jacob took up a lot of the time. I hope you guys appreciate what you said.
Yes, that was good.
I won't take up as much as time as that. But if you haven't already, be sure to go over to our website, litcapital.co.uk. Subscribe to our YouTube channel. We're going to be providing a lot of educational content on there, as well as a lot of funny shit. Aside from that, I'm going to take you guys through a trade that I called out in our copy trading channel. So a lot of you may not have access to this channel. Okay, so just to break it down to you how it works is it's just a premium service. So if anyone is interested in this service, very simply, all you guys have to do is contact one of us privately and we'll tell you how you can get access to this channel. With that being said, I know you, Shaq, did ask if I could go over this trade that I sent out. I actually did provide it.
Yeah, the EURNZD one, I think it was.
Yeah, let's have a look where it is. Here it is here. Oh, no, this was one from last week. Okay, it wasn't that one. So last week we caught a really nice move on this at 1,500 pips. And almost the same play happened again. So I'm going to show you guys. Actually, Shaq, you're in the copy trading channel. So yeah. I'm going to show you guys how I saw this move. And it goes back into the same things that Jacob and Adam have been saying throughout the call. A lit block, okay? Now, I don't need to explain to you guys what that is. You've just heard it in a few different concepts, in 3 different ways. So what we will talk about is how we take a trade from an actual lit block, okay? Now, the first thing that I do and that you should do is measure out the candle body to body, and you want to see 50% of it. So you mark out the open of the candle and 50%. Now, with that being said, if I'm looking to take the trade off of the 4-hour time frame, then yeah, I should mark out my 50% on the 4-hour time frame. But the likelihood of me entering this trade on a 4-hour time frame is unpredictable. Okay, so what I do, I identify the candle I'd like to play off, which is the last down candle in this situation. I go down into smaller time frames and I just simply refine the candle. Now, on a 1-hour time frame, we can see these 3 candles. And to my students who are on the call, you'll know that I've shown you guys institutions play within 3 candles. When you see 3 consecutive bullish or bearish candles, these are usually indications that institutions are at play. So from that being said, what we do, we mark out from body to body, the top of this institutional play to the bottom. And as you can see, I've already got marked out 50%. Okay, so the open was up here and the 50% was here. Now, what you should do just to cover yourself really and truly is have your stop loss at the bottom of the institutional play. But, as you guys could imagine, this is a 35 pip stop loss, which we gave out in the channel. This would be a, 250 pip stop loss. Now, I'm not going to name names, but a lot of traders out there would give you 1-to-1 risk reward rewarded trades, which quite frankly, if it goes your way, you're going to make a lot of money. And if it doesn't, it could blow your account. So we stick to a 35 to 40 pip maximum stop. So what we can see, right, this was last week's play, the 20th of March. Now we're going to play out. Okay, let's make sure it goes slowly. Now let's pay attention to this area here, right? This is the point of structure, okay? Now this point of structure for us represents bearish. It represents a bearish point in structure. So until we see price break this area, then and only then will we be expecting the market to turn from bearish to bullish. Now, I've actually pressed play and it's gone quite fast. So you guys have already seen. Bearing in mind, this candle here didn't break the structure, and this candle that we're currently on at the moment is approaching. Well, it's at the point of structure, but it hasn't closed. What we want to pay attention to is if price closes above. Okay. Now we can see within this candle, price has already closed above the structure. Okay, so now that we know we've had a break in structure, all we're simply looking for is now, the retest back down to play off of this institutional zone. Okay, so from that being said, it's a patient game. Okay, this is the 20th of March, 23rd, 24th. Now, some of you may say, well, if you know price is going to come down, why don't you just take the sell down to the area and then take the buy? As Adam said, this is a game of possibilities. So we have to always make sure that, you know, we're looking for the right move and not just the move that we think is going to happen. So for me, the right move is the buy, which is why I'd rather wait for it to come down and catch a move that I feel confident in. Because if I catch the sell and it pulls back and it messes around, goes into consolidation, I'm only going to have myself to blame. There's no candle that I'm playing off from the top here. So the structure is broken. Slowly but surely, we're seeing now it's gone from the 20th, market open 22nd. We're now on the 23rd, approaching the 24th, and we still haven't had the trade. We still haven't placed the trade. Okay. This also reiterates with what Jacob was saying: being patient pays. Okay. Now we're slowly approaching our entry. Now it's very important. Whoever's got noise in the background, please just put your Bosco. I know you're in the chat because I can hear that interference.
No, that wasn't me. So.
No, but I can hear the fax machine in the background, bro.
Always you.
It's always you, Bosco. Yeah. Even though Bosco's not on the call, it's Bosco. But yeah, so just paying attention, right, to the point where now price is near our entry. Okay, there's no need to get excited. There's no need to think, okay, let me just place the trade because now look, it looks like price has gone away. No, being patient pays. If it doesn't come to your setup, it's not the move you're looking for. It's very simple. Okay, so now we're being patient, being patient, being patient. Now I'm going to go into a 15-minute time frame, just so we can really see what's going on here. Let me speed it up a bit. It's a bit slow. Oh, it's not pressed. Okay, perfect. Cool. So you can see, guys, we haven't yet found our entry. It hasn't come to our area. If we took a trade off of the open at the top, then yeah, fair enough. Even with this candle here, we can still see it hasn't come to our entry. So we're patient.
This is what it takes, guys. This is very powerful what Bill's showing you, man. Different level of patience.
Now look, straight within that candle, we're on a 15-minute time frame. So that means within the 15-minute frame, I could go to the 5-minute, but I'm sure you guys get my drift. Okay. Within the 15-minute candle, we've seen price come down and give us the entry we was looking for. Okay, not the move here, not this other move. These are all fake moves. Okay, not this move either. They were all fake moves. We've waited. We've got the reaction off of the 50%. We may get a bit of drawdown. We may not. But ultimately, this is now a trade where look, we can see prices come down. We've had the small bit of drawdown that we anticipated, and now prices really look like it's pushing away. If we go into a higher time frame, it's going to look even better. Now, if you guys remember, the first take profit was 50 pips. That was it. The second one was, let's pause it just so you guys can see for transparency. Let's see, copy trade. Okay, the first take profit was 50 pips. Second was 100. The third was 130. And as you can see here, I said leave take profit 3 open. Just move your stop loss into profit, because I was very confident that the market was going to give us more than what I'd put down here. Now we can see straight away we're already up to almost 200 pips on this trade. Okay, so that means take profit 1, 2, and 3 has been completely smashed. Now we was able to grab 300 pips out of this trade. Okay, as we can see, if we take it up here, that's 300. If we want to be very accurate, it's, 303. But you get my drift, okay? We've been able to catch over what we expected to catch. So if you guys are new, if you've never really placed a trade by yourself, this is just to show you that the trades that we place, when we give you guys a take profit and a stop loss, we abide by them. But when it comes to the take profits, we, if our trade is in a substantial amount of profit, we will take the third take profit off and let the trade ride using a stop profit. A stop profit is just when your stop loss is into profit. Now, I know there's a lot of new people on the call. They will have no idea what a lit block is and how we're placing trades like this. But I'll be very clear with you, and even what a structure break is. But I'll be very clear with you. If you step into our mentoring program, these things will be very, very clear for you to understand. There's a few people on the call now. I've got probably 5 students on here. If I ask them, for example, past the pips, if I ask them, Josh, let's ask you actually. You there, Josh?
Yeah.
What happens when structure is broken?
Spectrum balance and fill.
Okay, so when the structure was broken here, we knew that price was going to come back down because there was imbalance still on the downside. Okay, there's imbalance in here. I'll label this out for you. You guys can see there's imbalance there. We can also see there was a gap in the market. Okay, so there was multiple, and also up here. Okay, there was multiple areas of imbalance that we knew was going to get filled. Why? Because the structure was broken. So just within understanding how the market moves, what happens when structure is broken, we was able to capitalize a 300 pip move. That could have been £30 within a few hours. That could have been £300 or £3,000. Just depends on what your lot sizes were. But ultimately, guys, this is a very simple and easy trade. There's no indicators involved here. It's just simple, man. There's one yellow box, one black line, one orange line, and that's it. That's all I need. So on that note, I'm going to end the call and just say to you guys, thank you for staying on the call as long as you have done. If you have any questions, now's the time. Of course, I'll give it a few minutes.
Yeah, Cavell, sorry, I've just got one question. One thing I missed, right? You see the orange line?
Yeah.
Why was that exactly the entry point? Was it because did that match one of the points in the Fibonacci from the yellow lit block?
No, so
one thing I missed, yeah.
That's cool. So what I done was I measured out, got my fib out from the top to the bottom of the bodies of these candles, right? So from body to body, I measured out these 3 candles. That's what I was playing off of on the higher time frame. This is remember on the higher time frame, we marked out this box, right?
Yeah, on the 4 hour, yeah.
And then we went down to the 1 hour to see where can we actually get into the trade. Okay, and then from that, I measured body to body across these candles, and I just marked out 50%. Now, as I said to you, you can take a trade based on the open and 50% of the candle. Okay, now, just because you're taking a trade on the open or 50% of the candle, that's nothing to do with your stop loss. Okay, those rules. So taking a trade has nothing to do with your stop loss. Your stop loss is down to you personally. Right? So in this case, because our criteria is having a stop loss no greater than 35 pips or 40 pips, we're not going to take the trade at the open. Okay? We're going to wait, take our chances, you could say that, but we're going to wait for price to come lower, play 50% off of the candle, because 9 times out of 10, or should I say most times than none, if the candle comes back and plays off the open, it will come also and play off 50%. It may not be straight away, but eventually will come and play off of it. So we marked out 50% of this candle, and from that, we took the trade. Yeah. Cool. From that, we made a lot of money. So this is the same play we're looking for day in, day out. Okay, if it doesn't, and as you guys could see, I saw this, right, on the 4 hour. I saw this last week. What's the date today? 25th. I saw this on the 20th. Okay. We weren't able to take the trade until the 24th. So, we had to wait 4 days for this setup to come. Just like you guys, I've been exactly where you are. Oh shit, the market's going up. I need to catch the buy. I saw this massive move. I saw the market open up and push all the way up, and I was like, wow, but sitting on your hands is more financially profitable than taking a trade in no man's land. I could have taken a buy here, not knowing how far it's going to go up, staying into the trade all the way until it comes back right to where I started. So you need to have some sense of direction. You need to know what you're playing off of. It's very important to know which candle you're playing off of. And in this case, understanding what a lit block is and how a lit block can benefit your trading is very essential, because as you can see, guys, there's no indicator telling you it's overbought or oversold. And I haven't even used the Fibonacci. It's just pure price action. So, yeah, I'll say once again, thank you guys for staying on the call. Please be sure, man, to click the link in our Discord to subscribe to our YouTube channel and like our content. Even if you don't understand most of it, your likes improve the algorithms of our videos being noticed by other people. So it's massively appreciated. And if you haven't already, be sure to follow our social medias. We've got a channel which is called Instagram, just for you guys to put your Instagrams in there and socialize. You know, your network is your net worth. You need to be familiarizing yourselves with like-minded traders, people that understand how price moves. You don't really want to be, you know, moving around with people that are using indicators and you're not, and you've got one set of criteria, they've got the other, because that can sometimes dilute your brain and, you know, and what's true to yourself. So be sure, man, just to connect with other people, because you never know. You know, I've had students in the past, they've actually improved my trading game. They didn't know much about trading, but there was pieces of what they said which actually helped me. So you never know who you're going to connect with. So yeah, man, be sure, guys, to communicate with each other. You know, the reason why we're called Learninteracttrade is self-explanatory. You learn with us, you interact with everyone, and you trade. As simple as that. So yeah, thank you guys for staying on the call. A bit of fun on our end, but we always say, if you guys have appreciated the call, Adam, what do you want to see? What number do you want to see today, bro? Ones or twos or threes?
We're going to throw some twos in the chat. If you enjoyed the call today, I just need to see a two. Throw a two in the chat. So I'm going to start it off and just throw it. There you go. Look, couple twos. Thanks for the love. Thanks for the energy. It's brilliant. Appreciate you all, man. I love you.
Yeah, I need to see some more twos, man. Flood the twos. Flood the twos. If you've enjoyed the chat, flood the twos. Yeah. Yeah, man.
Sorry, what was stupid, man?
Yeah, that's it. That's it. Money day, guys. Yeah, so guys, man, once again, to let you lot know, every morning we're on the charts, man. 6:30, we're on the charts. We make it publicly open to you guys from 6:45 a.m. Now, a lot of you guys say that you're going to jump on the call and you don't. So I'd say this, man. Don't tell us you're going to jump on. Just jump on. Even if you don't understand things right now, the only way you're going to understand things is by jumping on. Okay, so jump on the call, see what we're trading. There's a lot of trades that we take for ourselves that we don't throw out because, you know, it's just as simple as that. You know, we don't throw out every trade that we're taking. So if you guys want to be able to take the trades that we're taking, that's not being thrown into the Discord, that's not being, you know, put publicly online, then these morning calls are your best way. You know, you guys, I'm pretty sure everyone in here works a job. Yeah. If you start your job at 8 a.m., what time do you get to work? Do you get to work at 8 a.m., 10 minutes before 8 a.m., or do you turn up to work, you know, 30 minutes to an hour early?
Turn up early still.
Turn up early. Azora, what about you? You turn up early or on time?
Early, but right now on time.
Vel, just a quick one. You was late for today's call.
Was I? Yeah, I had the Wi-Fi, remember? It was my Wi-Fi in the morning. It's the Wi-Fi. You know, I've been on the call every morning talking about it. Hold on, stop the recording, mate. Stop the recording, yeah? So the whole week, I've been up 6:15. I've even had my girlfriend up by my side, ready to go, yeah? So, yeah, guys, man. The point is, man, you need to treat the markets like a job. Get to the markets before the London Open. The London Open is what time, Josh?
8 o'clock.
Yeah.
8 o'clock. So let's get to the markets around 7. Let's see what's happening. You'll find that the big moves are happening prior to the market actually officially being opened. You know, this move that I said.
Cavell, there's a Zoom every morning.
Say that again?
Did you say there's a Zoom? You don't do a Zoom call every morning?
Yeah, every morning, bro. Every morning.
Know about it. No.
Every morning there'll be a Zoom link that goes into the Discord. 6:45. If you go back and check the history, it's never been a minute late. 6:45 every single day. Okay, this is the prime example I sent this trade out around 8:22. This move happened bang on market. Market really gaining its opening times, 8 a.m. Okay, don't be late, guys, man. don't appreciate your money. If you appreciate your money will appreciate you. Any questions? Any questions?
No.
Jamie, Tony, user, Nabil. How do you join the Discord? Click the link in my Insta, bro.
Yeah, cool. Still live.
Yeah. Whoever hasn't joined our Discord, click the link in any of our bios. If you know me, Cavell, if you know Jacob, or if you know Adam, click the link in our bios.
Do you think it's getting ready to go again long?
Say that again?
Do you think it's getting ready to go long again?
For EN?
Yeah.
Yeah, it actually had a nice reaction today. Let me cancel the replay. We actually had another move here. I do personally think that price should actually go a lot higher, but before it goes higher now, again, my next area of interest is this point here. So I want to see price break it, come back down, and then we can go long. This move here, although it was 300 pips, it wasn't really the major move as such as this one here. I do want price to come and take this high out. But before price takes that high out, my areas, hold on. There we go. Yeah, I'd like price to come and just close above this high here, and then retest so we can go long. But if you guys trade any NZD pairs, man, they pay you a lot. Euro NZD, pound NZD, they pay you a lot. I promise you that. This is pound NZD. These pairs, they pay you a lot, man. So yeah, it pays to actually start to study them, man. These are the only two I look at: Euro NZD, pound NZD, and AUD JPY. That's about it, and US 30. Last but not least, actually, I'll show you guys US 30. Yeah, US 30, we caught a nice move this morning. We're looking to, we want to see this imbalanced field, man. We're seeing part of the imbalanced field. I do believe this is probably around the 70%. Let's have a look. Okay, it's above that. It's now around the 79%. Just missed my alert. But cool. We want to see price push a bit higher, catch a sell. We'll work 50% off of this candle here. Lit candle.
Why that one?
This one was the last up candle, the last up candle before the move down. And as explained earlier, when we see 3 consecutive candles, these are usually indications of institutions getting into the play. So we had a last push up before we saw 3 consecutive bearish candles, which took price well away from where actual price moved from. So yeah, this would be a lit block, and we want to see price come back and play at least 50% off of it. I'll mark it out. You guys can mark this out on your screen, take a screenshot. 22537. Don't be surprised if price comes up to there and then moves off of it. If we go back to what I said earlier on about taking a trade off of the open at 50%, this is the open right down here. It's the open of the candle. And if you're taking this trade from the open of the candle, this is, let's count how many pips that is. Okay, it's over 800 pips that you would have just been able to grab in 1 hour. In 1 hour based on just understanding what we're saying. So I know a lot of you do understand, but for those who don't, keep coming back to these calls and asking as many questions as you want, and we'll try our best to help you guys see what we're saying. But does that make sense? I know that makes sense to you, Cliff.
Yeah.
Yeah, cool, man. So yeah, that's it, man. Any other questions?
Oh, just out of interest, what move did you not catch this morning?
This morning, well, we caught a US 30 buy. We caught this move up here. What else was there this morning?
I was looking at gold, but it went down. I was expecting to buy. I didn't catch it, but that's what I was looking at. But it's now it's just consolidating, to be honest. But I do expect. I hope to get a retracement lower for it to be a big buy. But yeah, I was thinking it would continue. it kind of if I show you guys real quick before the call ends, what I did see this morning was, well, Cavell was saying to me, oh, he thought it was a sell, and I said, yeah, I want it to be a sell, but I actually saw this candle here. So similar to what Adam was saying about candles that do something different, like if you understand that this candle has dipped these lows here, which would have been people buying, dipped, all of that, played into this candle here, right? On a higher time frame, it doesn't look like much. Okay, it looks like a, you know, indecisive doji to, like, you know, trading and stuff like that. So even on the 4 hour, there is no down candle. So when you go on to dissect smaller time frames, you can see that yesterday, what does this look like? 3 consecutive candles, right? Remember when Cavell was saying you normally get that type of play, and then look, you get smart money entering. So then what I saw this morning was that if it's going to be a sell, I want it to beat this area and break this structure first. We didn't get that. It bounced off. We now got 3 pushes up, smart money entering again. It went for like 200. That's it. Consolidating. So they could be hedging in orders here or waiting for something. We don't have any US news, I don't believe, this week. Nor do we have, there's no yen news, nothing like that. So for all we know, they could be stacking buyers. Buyers and sellers are getting in right now. It's been consolidating most of the day. So we need to see something significant in order to say, yeah, like, you know, it's either go with the trend or look for a break of structure. We haven't got any, so we have to still consider it bullish. So that was what I was looking at. That was what I was looking at this morning.
Perfect.
Yeah,
We'll
guys,
wrap up.
let's gonna wrap the call up, man. So appreciate every one of you that have joined in. Be sure to lock in next Wednesday as well, man. More of the same. So I hope you guys have took some value from it. And for those guys that are interested in getting mentoring, we are actually due to have a flash sale. So be sure to look out for that as well.
Yeah, no coffin over here. COVID-19 sale coming soon.
All right, bro. But yeah, I'm out. Peace.
Remember, every day is money day, yeah? It's lit.
Hot ones, bro.
Bless up.